A brief description about the concept of deposit insurance is given here. Deposit insurance is a measure implemented in many countries to protect the bank depositors. That is, deposit insurance are the insurance provided to the depositors. That is, and it is a measure to prevent the risk associated with deposits in the bank. Here, deposit insurance is a measure implemented in many countries to protect bank depositors in full or in part. In some countries, we will get the full amount deposited, but in some countries, will get only a part of the deposit as insured. In India, the maximum limit is 5 lakhs. Even if our deposit is more than 5 lakhs, it won't be. The insurance company won't give the amount up to the maximum of 5 lakhs is given. The insurance up to the amount of rupees 5 lakhs is guaranteed in India. It is a measure implemented in many countries to protect the bank depositors in full or in part from losses caused by a bank's inability to pay its debt when due. That is, when bank fails to give back the deposit, then the protection given by the insurance companies or by the concerned authority is termed as deposit insurance. In some countries, they will give the full amount, and in some countries only the part will be provided by the government. Deposit insurance systems are one component of a financial system for providing safety net, and that promises the financial stability. And the banks are allowed and usually encouraged to lend or invest most of the money deposited with them instead of safekeeping the full amount. In many of the banks, borrowers fails to repay their loans when due. The bank's creditors, including the depositors, risk increases. That is, when the borrowers do not repay the amount, it will increase the risk of the bank and it will affect the bank's capacity to pay back the deposited amount. Because the bank rely on the customer's deposit that can be withdrawn on a little or on no notice, banks in financial troubles are prompt to bankrupt failures where depositors seeks to withdraw funds quickly ahead of a possible bank insolvency. In that case, if there is bank failures, then even if the depositor wants to withdraw the money, there won't be the money, and in that cases, this bank deposit insurance or deposit insurance companies helps the banks in providing funds to the depositors. Banking institution fails to have a potential to trigger, and the deposit insurance institutions are for the most part government run or established and may or may not be the part of the country's central bank. In some cases, the deposit insurance institutions in most of the cases may be run by the government, and it may or may not be the part of central bank, while some are private entities with a government backing or completely private. There are private entities, some private entities with the government, some established by the government or backed by the government, and some established or backed or not backed by the central governments are the needs of these deposit insurance companies. And the major functions of this deposit insurance is that deposit insurance is a protection cover for deposit holders in a bank when the bank fails and doesn't have the money to pay its depositors. That is, when a bank fails and it doesn't have the capacity to repay the amount of the deposit, then this deposit insurance company helps. Then second one, this insurance is provided by the Deposit Insurance and Credit Guarantee Corporation, which is a wholly owned subsidiary of RBI. In India, this deposit insurance is provided by the Deposit Insurance and Credit Guarantee Corporation, DICGC. It is a wholly owned subsidiary of RBI. In India, we have the protection from the RBI in the form of the Deposit Insurance and Credit Guarantee Corporation. And DICGC ensures all bank deposits such as saving, fixed, current and recurring deposit up to the limit of rupees 5 lakh per bank, that is per bank limit is 5 lakhs in India. If the total of all the deposits held by an individual in a single bank exceeds 5 lakhs, then he will be liable to get only rupees 5 lakh inclusive of principal and interest amount. That is, the DICGC will provide a maximum of 5 lakhs per individual per bank in India. DICGC covers deposits of all commercial banks and foreign banks operating in India, state, central and urban cooperative banks, local area banks and regional rural banks, provided the banks has both the cover from the, that is, in India, DICGC covers all commercial banks, foreign banks, regional bank, cooperative banks, local area banks, etc. under the DICGC schemes.